to keep the yuan strong and to defend the value of their currency by selling their US dollar reserves to buy up the yuan. But to get to those dollars, they have to sell US Treasury bonds. And that's exactly what we're seeing right now. So from the outside, it looks like China is retaliating against the US, but they're also doing it to keep their own system from falling apart, because they have to. The real question is, how long can China sustain defending its currency before they run out of dollars to support themselves? And China's looking at the US and thinking the exact same thing. How long can the US allow their bond market to be so high and to have this high interest rate before their own economy unwinds, goes into a recession, and they have to refinance $9 trillion worth of debt in 2025 at this super high interest rate? That's why there's a capital flight in the US as well. Money leaving the US stock market because investors are saying, we're just going to wait and see how this all plays out. Which means we're full circle. We're right back to the bond market. That's why yields are spiking, mortgage rates are going up, and why everyone is panicking about the debt again. It's a race against time for both countries, and in that sense, it's not helping anyone. So if this is really Scott Bessent's strategy, he's trying to engineer a situation where China's under so much pressure, every move they make just creates more problems, with the goal that both countries come together to negotiate something more favorable for both of them. So the next big question is, what happens if China keeps selling US Treasuries? And a few things could happen, and none of them are really good. First, US interest rates could go up, making mortgages, credit cards, and of course car loans a lot more expensive. So the Federal Reserve might have to step in and start buying US Treasuries to stabilize the bond market. It's basically quantitative easing all over again, QE 2.0, and we've seen what happens when the Fed prints money. Any day now, we could see the Fed step in to do this. But the worst case scenario is a full-blown financial decoupling, where the US and China stop trusting each other's money completely. And that's how you get two separate economic systems, or two world reserve currencies. Now, we're not there yet, but every move we make from here on out matters a lot. And the good news is that no one knows exactly how this ends, not even the people that are